War, oil, and Bitcoin. Finding clarity in the chaos. That's what today's live stream is about. Hey guys, it's Keith Allen and glad to have you guys with me today. Oh my goodness, what the hell is going on in the world? That's probably a bigger question than we have time to answer here today. But we are going to climb into this chaos and see if we can make sense of it. Obviously, a lot of tension in the world. That's an understatement. But the market reaction to it is something that is kind of concerning, to say the least. A lot of whipsaws, a lot of fake outs. You know, there's always a lot of dynamic forces at work in the market. I mean, that's nothing new, right? But when you add in war, you certainly have some wild cards that we may not have necessarily anticipated before. And when you see something like oil swinging 41% in a single day, like it did yesterday, that's a signal. That's not noise. That is a signal that's telling you that the global market environment is unstable. And we've got a number of competing forces at work here. And with what's happening with this conflict, President calls it an excursion. The rest of us call it a war. And every time he opens his mouth, he moves markets. And guess what, friends? That is by design. He knew exactly what was going to happen when this started. He knew that oil prices would spike. Now, I don't think that he knew that they would spike as high as they did. And I think that has him a little bit rattled. I think it's why yesterday he made the claim that the war was almost over. Of course, that's contradicted by his chief of staff and secretary of defense. Secretary of war, Pete Hegseth. So it's unclear where we are in the progress of this conflict. Whatever the case may be, yesterday he literally, while oil was on a 41% swing from a high to a swing low, which is insane. He comes on a press conference and says, "Oh, everything's going to be okay. The war is almost over. We're doing great. It's better than expected. Blah, 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 blah. Noise, 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 noise." And the market recovers. All markets recovered yesterday based on that statement. I've seen some members of Congress and the Intelligence Committee come out and flat out call Trump out for market manipulation on that move yesterday. That's neither here nor there. It's the nature of the beast, unfortunately. But with all of this stuff going on, these are times where it's really important, maybe more important than ever, to step back from the news headlines that the market seems to react to. I mean, like syllable by syllable. And stay focused on the charts and the data. Why? Because the charts don't have opinions. They simply show us where liquidity is building, where momentum is, where the structure is, whether it's been broken, whether it hasn't been broken, and where things might go from here. I mean, at this point, we actually do have two very clear scenarios developing. One, the bearish case. We've been in a bear market here for months. That structure remains unbroken. The other case is bullish, and both of them are actually legitimately on the table right now. And so we're not going to try and predict what must happen. The key is to find the levels and the signals that are telling us what's happening right now. And so that's what we're going to do. We're going to focus on what's happening in real time and see if we can find some clarity in this chaos. If you have been getting chopped up from the fake outs and the whipsaw moves, then you definitely want to pay attention to this one. And I'm glad to have you with me. If you're new to the stream, again, my name is Keith Allen. I'm a full-time trader. I'm a work from home dad, and I am co-founder of Material Indicators. You can do me a huge, huge favor by helping me grow this channel. Do me a favor, smash the buttons, hit the like, take a moment and share this stream with one of your trading buddies or a community that you engage in, and let's bring those folks into the mix here and see if we can grow this channel. And I also want to remind you to hit that subscribe button, because I don't want you to miss any of the future streams. So make sure you do that as well. And my last reminder for you, live chat is open. These streams are always better when you guys engage. So I invite you to come in. If you've got questions, ask them. If you have insight, share it, and we'll see what we can come up with together here. All right. So let's climb into the charts. Let me get my screen set, and we can do this thing, right? So let's see here. I wanted to share. You know what I'm going to do today? I'm going to do something a little bit different. If you've been a longtime viewer, I tend to have a lot of stuff on my charts. Admittedly, I'm looking at a lot of different things, and so I want to start out with really a clean chart, and let's just start with the basics. Let's look at the structure here, and we'll build from there. Sound like a plan? All right, let's do this. So, let me share. I'm going to start here on a candle chart here on TradingView. Why is that happening? That's not what I want. I want this guy right here. Let's go and share the screen. We'll go with this one. Boom. There it is. All right. Hopefully you're seeing that there now. So as you can see, here's the structure. Long term. I mean, let's go even weekly. And you can see here's the structure long term. So now let's add some resistance and support lines to give us a sense of where price is within this structure right now. And so I'm going to add a trend line here. And you can see this dates all the way back to 2018. And respects, this was this wick down here. That was the COVID crash, bit of an anomaly. But incidentally, just in case you're wondering, this is a line chart, and those lines get respected here, and so that's how I draw those lines based on that structure, and so you can see we've come awfully close to this structure here. Most recently, in early February, when price dipped down to 59, just below 60K, and we're now kind of consolidating in this sideways range here. But on the verge, attempting a breakout here on the weekly time frame. That's the chart we're looking at now. We can look at it on the dailies, and we can see, here it is a little bit more granularly, not quite down to the trend line, which at that point was at what, 58.5. Remember that number. It's an important one. But you can see a series of higher lows out of here, and now starting to make higher highs. Can we make another higher high this week, which would be around 74, right? Can we clear 74 to create a higher high? And that's when things get compelling from the bullish perspective here. And so now let's look at the downtrend. Let me add that line into the mix. And on the downtrend, you can see we've been in a decline since the all-time high back in October, and we have not come anywhere close to breaking out from this trend at this point, which at the moment, if it were to happen today, would be at 84K and change. So we've got a little bit of time here. As you can see, if we're looking strictly at the structure, then price is going to break either out or down from this range sometime it's going to be forced out of this structure by what is this? I can't see behind my deal. Mid-June, early to mid-June, right? This is like June 11th or 12th, something like that. And so these moves out in either direction tend to happen before you get to the end. So, maybe it's in the next month or two, we could see this, but it could go to the end if it wants to. And how long this conflict goes on is going to have an impact on what price does. And so here's the first part of the structure. Okay. Obviously, would be, maintaining above this level is bullish. Breaking above this level is much more bullish, and a breakdown, of course, obviously bearish. Now, what has us in this range? Let me start adding some layers in here to the chart. And the first thing I'm going to add is our timescape levels. Timescapes are marking quarterly opens, and as you can see, price has fit nicely within this range here since early February. We've just been chopping along for 5 weeks in this range. This is an important range. Why is this an important range? This range is very, very familiar to us. We spent 8 months chopping in this range. The 2029, not the 2029, the 2021 top is at 69K in this range. And we chopped in this range for 8 months from March of last year. In fact, almost 2 years ago to the day, first time we hit it after topping in back in 2019. The first time we visited this or revisited it, I should say, is in March of 2024. Almost 2 years to the day. And so we consolidated in this range for 8 months before the election day Trump pump took us out of this and eventually to a new all-time high. We've, of course, completely retraced that move at this point, and we're back in this range. So we're flirting with an attempt to break out, and we've had a couple of rejections so far, including multiple today if I took this down to lower time frames. And so a break above this level doesn't necessarily mean that we're breaking out and going to bull market, because, like, as you can see, there's a lot of friction here, just in these timescape levels, and of course the structure. Beyond that, let's now add in our key moving averages. 21 day moving average. We're going to look at these on the weekly as well, but you can see here's the 21, the 50, the 100, and the 200. These get more interesting on the weekly time frame. On the weekly, we can see that we have the 200 week moving average down here with confluence between a timescape level and the structure, makes this a very, very interesting range in terms of potential downside targets, down to about 58K. And the structure is at just above 60K now. And so that, to me, is very, very interesting. In recent analysis, I've been talking about what's happening here for months and months and months, since October, November, right? And so my range of targets went from 60K all the way down to potentially 25K in terms of the timing and what was happening with outside the other forces influencing the market, et cetera, et cetera. But this is a very compelling argument for us being in the range of macro support. We haven't confirmed it yet, but this clearly puts us in the conversation. Now, what's troubling is this death cross. We've been waiting for this for quite some time, and we've been talking about it being on this trajectory for quite some time. It just formed here on the weekly close on Sunday, and now we have another death cross between the 21 and the 100 week moving average. And historically, that doesn't bode well for price. I'm going to take timescapes out to make it easier for us to see this. Historically, when that happens, here's an example of it. Big cascade down. We can find another example of it back in 2018, another leg down. And so every time this happens, you get, let's go back to 2014 and another leg down. So it's hard to contest that. Yes, this is a lagging indicator, but it indicates a continuation of momentum. So if we have this death cross, how is it that that price is climbing? Well, we anticipated this, and there are a couple of reasons we anticipated this. One is historically, and I'm going to flip to another chart real quick, just because I'm mentioning this, because I have it highlighted, and then I got a lot of noise on this one. So let me clean it up real quick. Um, Historically, we have seen this kind of thing play out lots of times. Well, I say lots of times, but actually, it's about 4 times. So let's look at this and this and this and this. I probably could have prepared this chart for you earlier, but I'm shooting from the hip, guys. It's how I roll. So you can see here, we've got a few things that we have seen before. I'll even take that one out of the mix right now. And notice, okay, we have death cross between the 21 and 50, death cross between 21 and 50. We have consolidation with a green candle amidst this this consolidation, and then another leg down after this actually played out a couple weeks after the death cross between the 21 and the 100. And we're kind of at that inflection point right now. We also have something familiar that we've seen in each of these instances, and that was this oversold, moved to oversold territory on the RSI, and for extended periods of time back in 2018 and in 2022, and in back in 14, or when was this? 2015 and 2018. These resolved as the bottom. In 2021, it did not resolve as the bottom. Price consolidated a bit further, and then found another leg down before finally resolving above this 41 level on the weekly RSI to find its way out. So this is nearly a mirror image of what we've historically seen. So keep that in mind. Now let's go back to our prior chart and get into another indication of what told us we might expect a green candle right now. And so for that, I'm going to turn on trend precognition, and we can see that on the daily, we got green. On the monthly, we also have green. And this is consistent with what we have seen historically in March. And I'll take this. I'm not going to steal this. I will credit Benjamin Cowan for sharing with us the fact that in midterm years, March tends to be green, and we are indeed in a midterm year, and March so far is green. And what is it going to take for March to maintain green? Well, it's not going to take much. In fact, it takes significantly less than what we have right now. Last month closed at 66.9. Okay, so just about 67K. And so all price has to do is stay above that level, 66.9 to close green. So that's certainly within the range of consolidation here, and that would be obviously consistent with what we've seen historically. Now, this is a tentative signal. It has not validated yet. It doesn't validate until the end of the month. Lagging indicator, as I said, but what could invalidate this? Well, obviously breaking down below the structure could invalidate it. And obviously something related to this war could certainly trigger that. So keep that in mind. Now let's go back into a lower time frame situation here. Okay, so we know that we're trading within this timescape range, and we have another indication. Look, here's another miss, and even if I take it to to a lower time frame, and I'll look, and I have an adjusted version of trend precognition that I look at for lower time frames, um, with a higher probability score. You can see we got a rejection up here from that peak, and we're now again rejected from breaking above this timescape level at 71.3. Now let's go micro level, if you will. And on the micro level, this is not long-term trend. This is what's happening today in real time. If we look to our MTF mean reversion indicator, you can see beautiful bounce, called this perfectly on Sunday at 65.6, and this has been a nice what good probably 8% move or so, 9.5%. And so these red alerts here are telling us that we're getting toppy. It's unstable. The market should pull back, and as you can see, that these are 1 minute time frames, right? So this can happen. It relieves. It happens. It relieves. It happens. It relieves, et cetera, et cetera. It's flirting with the top of the Fibonacci channel here in this time frame, and so price is expected, as it always does, to revert back to mean, right? It's dipped already today, and now it's trying to trend back down in that direction. So these are the signals that I'm looking at in terms of the low time frame. And if we want to now sprinkle in some order book analysis, we can look at fire charts, and we can see that this liquidity around this level has been replenishing over and over again. I actually need to refresh this chart, I think, because it's been static for a long time. But the liquidity is replenishing here. And so every time it looks like price might break out, we get an iceberg that appears up at that level and pushes price back down. If we look here on the daily time frame, you can see more liquidity has come in at 74, more came in at 73. We went from 12.7 to, a couple of 3 million more came in here. We have these icebergs kept coming in, and here we are, right? So another rejection from that level around 72. 71.3 is where the timescape is, and right about now we're below that level, just below 71. Will this hold and make another attempt? Quite possibly. You can see there's been some volatility, there's been some trading, there's been some buying of lows and selling of highs, there's been some fake outs. All of that's happening, and I hope that you're not getting chopped up in the process. So collectively, this is what I'm looking at on the lower time frame. And you can see, look, brown mega whales just made another purchase here. Not a big one, but you can see them buying back in, but it looks like this attempt is being lost. This could change in the next couple of minutes, but for now, this is what we're looking at. And so if we go back to our original chart here, we can see that from a I can't even find my chart. Where is it? Okay, here we go. We can see that from a low time frame perspective, this is 1 hour. Things are again starting to break down. If we zoom out to a higher time frame perspective, you can see that we're still stuck in this range between these timescape levels, well within the bearish structure, but close enough to local support to explain why we're seeing some accumulation here. And when I say some accumulation, we're getting mixed signals, in the lower time frames of whether this is accumulation or distribution, and different classes are doing different things. But I want to show you this. If we go back to fire charts here on the higher time frame, let's look at the monthly and look at what the green order class has been doing for the past month. This is an indication when you see a steady sloping line like this without a lot of contour to it, right? Like you see these, like blue is the cumulative of everything. You see all this contour to it. That's a mix of all order classes. But when you see very little contour, This is an indication that this order class, the green order class, this is $1,000 to $10,000 market orders. This is for the past month been dominated by an institutional TWAP bot. And how much have they bought in the last 30 days? Um, about $658 million worth in smaller orders, just methodically ticking away. That order class is accumulating. Now, uh, contrary to that, if you look lower on this, in this tag box, you can see that, that $10,000, $100,000 order class, which would be the red class, they've done nearly $1 billion in market selling. Purple whales have sold 60 million net, and brown mega whales just 3 million, down 2.5 million net. The reason those numbers seem so small is because those larger order classes can't make massive market orders in thin order books. And a lot of this range, we've had thin order books. So that's why they use the smaller order classes. We've seen the orange order class, the smallest order class, has had some periods of TWAPing, and we identified some of that last week. Hard to tell on this chart. Let's zoom in a little bit. I think I need to refresh that and we can get some more. They just haven't done a whole lot. It's been relatively contourless in the in terms of the actual value. They're only net minus 9 million on the day. On the week, that order class is net positive 31 million, almost 32 million on the day. And over the month, net negative 28 million. So they've had a big week, needless to say, last week out of that order class. So those are just some things to consider. And let me go back to the normalized view, and we can see. So here was that TWAP section I was talking about out of the orange order class. Just happened here, and this was like this was close to 40 million in 2 hours. So that's why it's like a vertical line. So there are periods of accumulation happening, and of course, we heard from Michael Saylor. He loaded up again in the past few days, right in this range top, by the way, which is his pattern. He tends to do that, trying to trigger a breakout or maybe show confidence to the market that he doesn't care. It is what it is. View that as you wish. So these are the bullish cases in terms of structure, but also bearish cases in terms of the structure. We're right in that zone, right? In kind of the point where we're teetering on whether this develops into a recovery or not. And I would say, as we sit right now on this very day, we are still in a bear market, and this death cross specifically gives me more confidence in the idea that price is likely at a macro level to at least go back and test support before a breakout here. And so maybe that next leg down only takes us down to this range. And if it does, I mean, look at how the bottom of this range is ascending over time, right? If it went to the range low right now, which is at 60,000, roughly 60,800, and stayed within the structure, that would be a higher low. If it goes down and flirts with the 200-week moving average, that is a lower low. And those things are very important. A lower low often leads to more lower lows. So we got to watch this. We got to watch what happens here. And we could chop here all month. But don't forget, don't turn a blind eye to this structure and to this 200-week moving average. And we'll know that the recovery is coming when we start to see the candles reclaiming the moving averages, the moving averages starting to unwind, and we'll see it happen on lower time frames first, right? I mean, we need to see a decisive uptick in this green 21-day moving average to start to work its way out of this, as it historically does, right? When you see that start to happen, that is your first indication that we might be on the way to recovery. We will also, of course, want to see the timescape levels being clicked away one by one as we work our way above the moving averages and the timescape levels and eventually out of the structure, et cetera, et cetera. The key one for me is, and I've expressed this many, many times, is the yearly open at 87.5. And yes, even though that's above the structure, we could break out from the structure and fake out after a reversion after a rejection from these Q1 timescape levels. So keep that in mind. This market is faking people out right and left. So be mindful of that. So this is what the recovery would look like to me. In conjunction with, and if we look at it on the weekly time frame, and I will tell you, if you're day trading this, it's risky shit. So be very, very careful. It's ill-advised. And so weekly time frames, higher time frames are a little bit more stable, a little bit easier to trade. So keep that in mind. Quick comment here. Oh, hey, Alex, man, I appreciate you, dude. You're always with me, and that means an awful lot. Thanks for joining me. Hope you're gaining something out of this. As for the rest of you, I feel the same. So this is what I'm looking at here. And in terms of those other downside targets we talked about, maybe potentially going to that 46 or mid 40s range, that's largely based on this cluster of timescape levels here. And sure, we could build arguments for any price level you want. I could build an argument for going back down to the 25K range, 25 to 30K range. But I think this is all kind of conditional and situational. And so we're going to do this range by range, not spin ourselves out, not get married to any narrative, not trade the war news, but keep it in the back of our mind, or maybe the forefront of our mind, knowing that it is influencing the overall market, and that in an instant, he can call that fleet back from the Middle East, de-escalate the situation, or even escort those tankers out of the Strait of Hormuz and return the world's energy supply, and this market will change literally in an instant. So whether this conflict escalates or de-escalates is going to have a lot to do with how this develops. And that's something that we have to be mindful of. Of course, my heart and my thoughts and prayers are with those who might be in harm's way. And I hope that if you're in one of those hot regions, I hope that you're keeping safe. If you're actually in the hottest of regions, you probably don't have access to this, but we've got some members of our community who do, and I feel for you guys, and I hope that everybody is keeping themselves safe. That's priority number one. So that's it, man. In a nutshell, I hope I've given you something to think about, something to marinate on, something to chew on, and something to help you make sense of what is happening in this market. The fake outs are coming, my friends, and there will be plenty of them. So if you want to trade the range and the volatility, there's opportunity there, risky as it may be. But just know at a macro level, a lot has to happen for this to really resolve itself, and we're certainly not there yet. All right, gonna wrap it right there. Time to go be a dad and pick up kids from school. Hope that's giving you some insight. If you want more insight, you want more info, you want more details, you want any of the tools, you'll find links in the description down below. Again, do me a favor if you haven't done so yet, smash that like, leave a comment, and make sure you hit that subscribe button so you never miss a future stream. All right, guys. Hope this helps you trade smarter. Stay safe.